Here's a not so fun stat. Almost 9 in 10 investors lose money in real estate at some point in time during their investing career. So we're actually looking at some stats on why that is and then how to avoid it. And some cool stats on it. So that's what we're going to talk about today on the Furlo Capital Real Estate Podcast, where we dive into the statistical real estate investing, dive into the statistical intricacies of passive real estate investing, where our mathematical goal is to equip investors to invest wisely in both property and people and the numbers, so that together we can build mathematical wealth while improving housing. I got it. I'm James. This is my wife, Jessie.
That was a lot of math.
Oh, yeah.
A lot of math talk.
A lot of integration in there, which is another type of math concept.
I don't know. This is not my style of podcast here. I took one stats class. No, was it stats?
No, you took a math.
Econ.
You took a calculus class.
That's even worse.
I thought you took a calc class or some sort of math
Well, I
class.
did. I took a calc class. And then I dropped it because I changed majors and I didn't need it. That was really hard.
Oh, I don't think so, but yeah, I get it.
It wasn't stats. I took econ. You convinced me to take econ, and I was so confused.
But it was amazing. Supply and demand. I picked a good teacher for you.
You picked a good teacher. The teacher was great. I did learn things.
I learned
But
things.
I also was very frustrated about how economics works.
Those are, I would argue then you did understand it if you found it frustrating.
Well.
But I
Perhaps I did understand it.
Perhaps
not
I did.
mine. Yeah.
No, I understand. Well, we're not going to talk about economics. We're just going to talk about just straight up some interesting numbers. And really, it's the story behind the numbers that we care about. Because I found this interesting report that was talking about how 9 in 10 real estate investors have lost money and have regrets about their investments. Ooh. Yeah, right?
That's a really high percentage of people, which it doesn't surprise me that they lost money, because I'm like, okay, if you're doing multiple deals, inevitably,
I've lost money on it.
Yeah, you're gonna have a deal that doesn't quite go through. It breaks even. You lose money. Yeah. It doesn't sell for as high as you thought.
But some of these are reasons where you go, yep, that'll do it. And so we want to talk about those. And there's math behind the percentage of people.
Okay.
Yeah. So, oftentimes, people invest in real estate for that thing called passive income. Yeah. Amazing. But for many, it's, especially DIYers, it's anything but passive. And sometimes it's not even income. So 40% of people wish they'd actually never started investing in real estate, that was a high
nearly
number.
half.
It's like, dang.
Huh.
I would say a little more than 2/3.
Is this how are they counting investors?
These were, did I write this down? It was data from a survey of 485 American real estate investors who invest in rental properties. So
I wonder how they measure it, because it's a drastic difference between, say, like you who are pulling funds together, you're investing in real estate, you do multiple deals.
Not that.
As opposed to I stumbled across this house, I bought it, and then I moved out and decided to rent it because I couldn't sell it. And accidental landlords.
I don't know. Probably all of it is my guess.
It just seems skewed maybe towards people who don't want to be doing it.
Well, that's fair. Well, I think that is fair.
Because the stat is true that you've lost money, but you don't regret it.
In order to be successful does require some intentionality. Yeah. You can't just stumble into it.
I
think that's a bigger takeaway there.
Right.
But let's talk about some of those specific reasons. Before we get there, 23% of people wrongly believe that real estate investing would allow them to quit their full-time jobs, while 24% regret being on call for tenants and others.
It's often a deceiving piece of managing real estate, I feel like, because they look at the numbers and they look at it's a property. Like, I could take care of stuff, but really managing rental units is a people business. Like, you are caring for people and responding to people, and it's more like hospitality, and I don't know, you're interfacing with human beings most of the time. So if you're not ready for that, I could see that being a little bit this is so annoying.
Yeah, so that's actually really good. So number one reason that we have, which Stats already off. I must have misplaced a number somewhere. Oh, there we go, 29. So 51% of the regrets, or 51% of the people who said like the different regrets they have, said that one of them was dealing with bad tenants. And closely related to that is property damage that they do as a result of it. Right. And so the root causes behind that, it's a few things. Like it's just weak screening or no criteria whatsoever, which honestly, that was our first one. Or a rush to fill a vacancy.
Yep.
Also our first one. Poor property management oversight. So if you do hire someone else, like you're just like, and they're done, you know, they're just doing their things.
Yep.
And or you have no systems for communication, inspections, or enforcement. You just kind of running.
Yep.
Right. And so a lot of it, just turnover costs are crazy expensive. Like there's the actual cost to fix things up, but then it's the lost rent as well. And so, especially if there's damage
costs,
and stuff,
if you have to evict them.
Yeah, honestly, that's one of the cheaper things.
Yeah,
it really is
true.
The vacancy. Like if you imagine you got a rental unit that rents for $2,000 a month, and because of some damage, you got to go through and redo some floor, redo some paint. Like you're spending $3,000 right there, plus $2,000 for the vacancy. Like that's a $5,000 turnover that's going to take you 2.5 months to break even on. So it can be bad. So good operations though can eliminate like 80% of tenant problems before they even happen. And this is, I've talked to people about this before, like tenant quality is the number one driver of returns. It's more than everything. I was talking with my team last week and I was like, tenant screening. I went, that's number one. If we get that right, the rest of this business is super easy. If we get that wrong, it becomes incredibly difficult. And we actually have that right now where there was a tenant who we rented to them, and it was an interesting situation where it was like everything on paper was fine, but I definitely had like that spidey sense, like something's maybe not right here. And we ended up renting to him, and it's been a pain since like literally day one. Yeah. And we're only like day 45.
Oh boy.
Into it. I'm just like,
a month in, and
it's been super frustrating. And I was like, so even today I make those mistakes where, and I know what happened. I've got owners who really, really, really wanted it rented out. So I was like, well, okay. And
you felt rushed.
Cause I had someone lined up and they backed out.
Yeah.
And it's just, I was like, I don't know what to do. And so the next people came along and I was like, man, they're on the border. So even I fall for that kind of stuff. And it's tough. So you do want to ask your sponsors, hey, what is your screening process? You know, what percentage of tenants renew, or how often do you inspect units? Like, what are some of those things you're doing to catch those issues early on to try to minimize turnover? 39% of people, this is number 2 reason, said losing money is a regret. Which I'm like, yeah, of course.
Yeah, you don't get into real estate to lose money.
but there's even somewhere, and the next one's kind of closely related to it, which is overpaying for a property. That was 33% of people said that was an issue.
And I would imagine...
Yeah, we're going to bundle those two together.
I would imagine that's just because for both of those, it's like either you didn't have accurate numbers when you were evaluating the property, or what's my phrase that I like to use for that? Using perfect math. Ooh, yeah, you tweaked it to be like, okay, if everything works perfectly well, it'll make money, and it doesn't ever work perfectly well. Yeah, that's true. Yeah, or
you just forget to account for things like vacancy and turnover and maintenance and CapEx, all that stuff. Or you overestimate the rent growth, which recently has become an issue. Like rents right now are flat to declining. Which has been really hard because I feel like I'm walking in conservative on rents and they're just sitting.
Interesting.
And like I've got one rental where he had it rented out at, I think it was like $29,000. And then that person moved out. I took over and I did a rent analysis and I'm like, dude, the rent's like $2,400 in this area. Which he was like, well, I'd like to get 26. And I went, well, then you would like to watch it sit. And we watched it sit for 2 weeks until finally he was like, well, drop it to 25. I was like, okay. Then we sat for another week. We dropped it to 24. And I finally started getting phone calls.
Interesting.
Yeah, man. Like that's the market.
Is what the market's demanding right now.
Yeah. And by then it had been a month. And so now he's like, dude, get this thing rented.
Yep.
And it's been like, okay. Like we're okay, but there's a process. So,
Right.
yeah. And then like I said, closely related to that one is doing an emotional purchase.
Yep.
Right. Which is fine if you're going to move into the house, but if you're genuinely doing it as an investment, like you shouldn't do that. Or you're trusting a realtor or the seller instead of the numbers.
Right.
Or the one I've fallen for this one, cheap house equals a good deal fallacy. I've got somewhere in here my notes where we bought a place for $1.
Yeah.
I was like, how could you? This is amazing.
How could you not make money?
Yeah,
It's
well,
like,
I can tell you how. Have super high rent fees for the lot that it's in, and have it sit vacant for like 6 months. Yeah, you'll lose money. It's guaranteed. Or not running comps or a cap rate, just kind of going for it. Yeah. So the fix is kind of the same for both of these, right? Do a full underwriting, stress test the numbers, look for the downsides, especially if you're talking to a sponsor. Be like, hey, can you what are the downside scenarios? What are the risks of these things?
Sure.
And you just want to use data-driven acquisition models. If you have a buy box, kind of stick within it, which mine's like, yeah, it makes money.
Yeah.
And generally in the area-ish. For the most part, sometimes I will step
have
outside
your criteria and follow the criteria.
But it's interesting. There's this place in Klamath Falls right now. It's an 11, I think it's 11 unit. It might be bigger than that. It's 11 unit apartment building. They want $1 million for it. The numbers look pretty good. But I find myself like, it's in Klamath Falls. Like there's nothing distinctive about this building. It is like, it's a big rectangle, 2 stories.
Yeah.
And like,
Sounds like one of our other buildings.
yeah, but I have zero infrastructure, zero knowledge.
Right.
Like,
Yeah.
I mean, there's like Bigger Tower is an interesting one because it's like, it's an actual iconic landmark. I'm like, yeah, like I'll figure that out. But this one, like, it's just a box, like, and I can't leverage any of the existing systems I have here. And so even though the numbers look pretty good, I find myself being like, you know what? More and more of my buy box is like, can I leverage my property management team to run it? Because it's just so valuable to have that. So you want to ask those kind of numbers.
I think another like valuable maybe step or something you could do is have somebody else take a look at your numbers.
Ooh.
You know, because like
that's good.
I would obviously do that because I'm not a numbers person, and I would be like, I have no idea what I'm doing here. Like, I need somebody who knows what they're doing to look at this and tell me, does it work? Can I trust it? But also, like, they're not emotionally invested either. Like you were saying, you know, if you found this deal and it's so great and so amazing and the numbers work really well, they could take a look impartially at it kind of and be like, I'm just going to analyze, you know, the property for what it is with the market and, you know, all the other aspects.
Yeah.
But yeah, that's wise.
Yeah, what you want, and I'll tell people this because I'll mean it. Like every once in a while, someone will have me look at a deal. And I told them on more than one occasion, I'm like, hey, man, if you end up passing on this, let me know.
Yeah, this is
a good deal. I haven't had a friend. He actually bought the place. I manage it for him. And he was contemplating, does it make sense to sell or hold on to it? And I was like, well, if you're going to sell, like, let's talk.
Yep.
I was like, depending on the price that you're looking for. But yeah, because he got a good deal, which is awesome for him.
Yeah.
But yeah, no, it is helpful to have that third party. They don't care. That's part of the role of an appraiser, but this is like the step before that.
Sure.
Yeah, 100%. Another issue that 33% of, nope, sorry, I already read that one. 31% of people, I'm just making sure. Yeah, that's right. I had the chart in one place and I had my notes in another. So I'm just like, I'm going back and forth, making sure they're right. It's just long periods of vacancy, which they don't define long. So I don't know.
31% of people
one of the regrets is that there's
their
just
investment because it's that vacant.
Yes. Yeah. Yep.
Which I feel like that's related to like screening and possible market analysis. Like if you just didn't do your due diligence and it's not filling up, like.
Well, it's like we were talking about. You could have it overpriced for sure. You could have a slow turnover process. That's totally a thing.
That's true.
I've got another set of people who want me to manage their property for them. It's a studio. It's tiny. We talked probably 5 months ago. And they're like, yeah, we're just trying to finish up some stuff to get it ready to rent. And they were working with some contractors. It's kind of out of town. And so it's a drive. And at the time I asked them, I was like, hey, do you want me to help like shepherd this process and get this thing over the line? Like, no, we got it. 5 months. I'm still not managing it because it's in the final, I guess they finished their thing and now there's some other stuff. They're like, hey, now winter's upon us. We have more things to do.
Wow.
And so it's just a slow.
Yeah, it's not making money.
Well, yeah. Well, part of it is quote just a studio, but it's also this out of sight, out of mind thing, right? Something comes up on the weekend. They don't think, oh, it's a Tuesday night. I should drive over there and get an hour's worth of work in. They're probably waiting for like there's work. We got to wait for the 5-hour chunk, which never comes because life happens.
Yep.
And so it's just a slow process. And it's like,
Interesting.
well, it's a beautiful day. I would love to be going out doing fun stuff with the family.
Yep.
Or
would I rather go hiking?
Swinging a hammer, which I totally get.
Yeah.
As opposed to say like, like where we're at, it's like, no, dude, like I have people who I've hired to do this stuff.
Yeah.
And it costs money, but man, it gets done.
Right.
Like,
and it's much faster than if you were doing it yourself. So.
Yeah. And I get it.
The trade-off.
It's a trade-off.
Yep.
Both of them time. Just one of them, like you have to write a check. The other one, you just don't receive a check. But but it's totally one. And like I said, not paying attention to the marketing stuff and just saying, oh, I got this last time. I'm going to increase it. Whatever percent could be a thing. So you can ask what's the average days on market, or if they do tenant satisfaction scores, which we don't. So I don't. I'm sure we could, but we don't. Kind of related to this one, which is it's just poor screening. I don't know why they broke it out into two. So dealing with bad tenants is 51%, and then not screening tenants enough is 30%.
Yeah.
So I'm pretty sure like that's a solid 80% is, which I would say is that's sort of an issue.
Yeah.
At least that's how I would interpret.
I mean, they're related for sure. Because if you don't do good screening, you often end up with poor tenants. So it's related.
Yeah, and it's just the classic, right? You don't have a consistent standards. You're not checking for their income. You're not doing a background or credit check. Yeah. We actually have an interesting one right now. What the heck? We'll put this on tape. So we've got some people who have applied to a place. It's a group of this will be really interesting. So it's 6 dudes who want to move into this. Yeah. Okay. Who want to move into a single family home, 3-bedroom, 2-bath, which in Oregon, the rules are you can 2 per bedroom plus 1. So max is 7. So they're within that, but it's just not normal to have 6 buddies. So we're trying to go through the screening process and we cannot verify like their identities, and therefore can't do the background and screening check because that's dependent on verifying their identities.
Yeah, that seems like an important thing.
I should qualify this, which I have not directly spoken with anybody who's going to be renting there because we've been working through a translator.
Oh, okay. That adds another layer of complication.
So the reason why we haven't been able to verify identities is because they may or may not have the proper United States identification, I guess.
Can you? What's the rule around that? Can you deny?
Nope. Oregon has explicitly made a law saying no, you cannot. You can't even ask.
Well, but you can require verification of their identity.
Yes, totally.
And if they can't provide that, then you could say, sorry, it's an incomplete application.
Yes, you can. But you can't, all right, fair enough. I cannot discriminate, it would be the word that the Oregon legislator would use. I can't discriminate upon like their country of origin or where they're from or even where they would like all that stuff. Yeah. You're not even supposed to ask in anymore. And
it's a little awkward. But within your screening criteria, I feel like you could definitely say like we need to have some sort of proof of identification on file.
Yeah. And so we've run into this, which some people could argue is a indirect form of discrimination. Because if you require them to do something that only a certain nationality would have, then therefore.
But you're not.
But I'm just saying, you got it. So it's still like
legally,
you got to be careful
if they're here. Then
because if you're like,
they should have documentation that
one would think, yes.
I could see it. How I can see how it's sticky.
One of the questions that the translator asked was like, do they have to have papers? I was like, So, but this is something that we're grappling through, right? From a tenant screening standpoint.
Sure.
And we're like, and it's like 6 guys, which I get it. I mean, I get what's happening, right? And it's a tricky situation. And this time of year is a horrible time to try to rent something.
Yep.
And I've always told people, anytime you try to rent something between Thanksgiving and New Year's, like it will 100% of the time be a funky situation. It just always is. And if it doesn't seem like it is, you just haven't figured it out yet.
Yeah.
Because
nobody
wants to move this time of year.
Yeah.
So I'm just like,
they're moving because they have to.
So I got this application and was like, yep, that feels about right.
Interesting.
And so now we're headed down this route of like, well, can we at least talk to a current or former landlord to try to get a sense for what it was like having them live there?
Sure.
Maybe that landlord will be honest with us and give us something. But yeah, it's been an interesting, but this is the thing, right? Like this owner, it's hurting. Like he wants me to rent this place out. And I'm like, well, I mean, I've got these guys. They collectively, they have enough income because they all work. They're just trying to save some money, which I totally get. And it's just.
Can they all give proof of income?
Yes, they can.
Interesting.
It's interesting though because they all work seasonal jobs, but they are constantly working some sort of seasonal job.
Right. So they bounce employers,
Correct.
but
but they're regularly bouncing, I guess.
Yeah.
So they can show 6 months of income, not necessarily 6 months of the same employer, but just 6 months of income.
That makes sense.
And especially all combined, it's not like, it's fine.
How does someone get paid if they can't prove their identity?
Well, you can open a bank account, I'm pretty certain. Dude, I don't know. Or they just
You
get
have
it,
to prove
or
your
they get a
identity.
check and they cash it. That's a thing. And then they just have it.
Well, yeah, but the
on their
employer has to report like what they've paid and everything. I mean, I guess they do.
Supposed to. Yeah, it depends.
Weird.
And they might. I don't know. Dude, I don't know. I do know you have to fill out an I-9 for anytime you have an employee, but they're probably not employees. They're probably contractors. And so they just write them a check and don't worry about it. That's my guess.
Interesting.
It's just all contract, all 1099 work.
Anyways, all right. We went down that rabbit hole.
So poor screening is a thing.
Poor
And I
screening.
guess the point that I'm trying to make is that it's not always obvious. Like there are definitely tricky situations.
Yeah.
That
So even if you have a clear criteria, there's some exceptions that you're like, I know what I want to say here, but sometimes I can't just directly.
Which is why 30%,
Say no.
that's a regret of 30% of people. I didn't have a good enough screening process. And again, I've got ours is super rigorous.
Right.
And it's to the point now, and I've seen enough and we've done enough patterns where I'm like, okay, I can see this pattern
can
coming.
recognize it,
What's the
yeah.
right way to navigate this so I don't get in trouble? But I'm also fair. Like I do want to rent it out and these guys do want to rent to me. So what do I do to set up those safeguards? And like one of the things we're talking about is like, well, if we just double the security deposit, like now we're good for 2 months. If there's a problem, okay. So there's things like that, but you got to have that process in place. And if you don't, I could totally see that being a regret. We're kind of getting lower down the list here, but managing from a distance is a regret, especially if you're doing like the DIY type of thing.
Oh, yeah, because you're investing travel time now, too. If you're the one going back and forth or you miss stuff because you're just not there, you don't see it. And
yeah, no, totally. Or you're just slow to respond. That's a big one.
Yep.
Yeah. And I get wanting to save some money, but or just not setting appropriate rent rates. They're either like it's priced too high, and so they have a vacancy, or it's priced too low. That's another 27% of people say that. So you want to ask, hey, what is your pricing methodology, and how do you do your market comps? And someone like me, I've got a bunch of different sources that I use in addition to just my own stuff.
Yeah.
And at this time in the market, again, having seen enough things to recognize if I see a comp, I'm actually gonna go a little bit underneath it because I just know from my experience of watching things sit where I'm like, I know it says I could get 1,600 for this. I'm going to go for 15 and actually get this thing rented and have whoever rents it from me be happy. And I'll reevaluate a year from now. I'm willing to forego the $1,200 a year for it to not sit for a month.
Yep.
That's the balance. 25% say each legal issues and bad vendors. Again, that just comes back to that. They're doing it themselves and they're not vetting any vendors, and they don't really do it enough to be a high priority for the vendors because it's just one house, whatever.
It's just one. Okay.
Yeah, it could totally be a thing. And then I thought this one was interesting. Here's my final one. 24% of people not being knowledgeable enough about investing.
Ooh.
Is a regret.
Yeah.
I guess if you're like, hey, I'm doing this passive thing, and then you just kind of, you don't have to worry about it. It is not investing in the stock market. It is not an index fund. It does definitely require some education there. So fixes are pretty easy. Watch shows like this. Pretty good. Or partner with people like myself who do have decades of experience and pattern recognition and seeing all these things and reading these reasons and going, yep, I can see how those would be problems.
For sure.
So I got 5 things that you can do
to mitigate.
To mitigate.
What
a fancy word.
Regrets in
investing.
investing.
To mitigate the regrets. Yes, to not be ideally one of those 9 and 10 who lose money, and definitely not one of those 40 who are like, oh, why'd I do this? Right. So number 1, underwrite your deals with real numbers, not fantasy, no perfect math here. Treat tenant quality as a core investment metric. So screening, tenant screening is super important. Yeah. I would argue, again, number 1, even more important than the buying price, though that's definitely up there.
Both having a criteria and following it.
Yep. You want to judge the operator more than the asset, which might be yourself that you need to judge, and you might have to hire someone else because you may not be willing to put in the time or energy to pull it off. If you are working with an operator like myself, demand transparency. You want to see quarterly and monthly reporting. Ours is all on demand, so you can see it at all times. And then just ask better questions before writing the check, and you'll avoid 90% of these regrets.
Wow.
So
it's kind of sad. It makes me feel bad for investors. I'm like, no, this could be so good.
So much of investing is about wealth preservation, not necessarily multiplication, which is fine. But that's why, you want to watch out for some of these things. So, I think, again, it comes back to weak underwriting or weak operations. Yeah. If I had to really boil it down to 2 things. So if you do a good job with that, partner with someone who is doing good at that, you'll be fine. And it's all good. So there you go. I thought it was an interesting chart of numbers.
That wasn't
too
so
mathy.
Much. Yeah. I was just about to say, that wasn't so much stats. There were numbers, but that wasn't bad.
It was the numbers. It was the story behind the numbers. Yeah. So we're all good. So there you go. Again, if you don't want to be one of those statistics and you want to be on the plus side, would love to talk to you about that. And so you can check us out, learn all about our investing thesis. We got this awesome due diligence checklist with a bunch of questions that you can ask as well. So you can check us out online at furlo.com. So with that, thanks for listening. Have a great day.